Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Adam Weinstein. Adam is a managing director and COO of New Mountain Capital, a $50 billion private equity firm that is focused on middle market buyout, credit, and net lease. I really enjoyed this conversation because we focused on two critical elements of building investment firms: people and process. Adam discusses their investment committee governance process that seeks to foster broad input from the team to mitigate errors and promote consistency. We also uncover some of the challenges in group decision-making and why New Mountain Capital is opposed to the term back office. We then dig into how inclusiveness drives performance reviews, compensation structures, and how to develop a mentor program. Please enjoy my conversation with Adam Weinstein. Adam, thanks for joining me today. I'd love to hear how you started in the business and how you made your way to New Mountain.
Well, it's great to be here, Scott. So I started my career in accounting, and I had a professor who taught me that accounting really is the backbone of business, understanding a business's finances, what's going to make you a better operator. And so I became an accounting major. I minored in finance and political science, and it led me to the public accounting world. Started at Deloitte. My first day of working was September 10th, 2001, right next to the World Trade Center. So it was an odd time, obviously, to start my own career. But I started right away in the private equity practice at Deloitte, moved over to their M&A practice where New Mountain was a client of mine. And when I heard about a prospective role at New Mountain, it was a small 15-person firm at the time, I jumped at the opportunity to be at something at the ground floor.
And what was the role that you accepted at New Mountain?
So I'm at the firm now just about 19 years. So my first 4 years, it was very focused on the office of the CFO, the finance world. So reporting to our funds investors, working on performance related, what are our IRRs, working on the annual meeting where we report out to our investors. So very, very much focused on the private equity business and fund level reporting for the first 4 years or so before taking on a broader set of responsibilities as the firm started to go through a pretty strong period of hypergrowth.
How did you end up getting into the COO role as you are today?
So I would say in 2009, there was another gentleman, a longtime partner that we had. He really started to take on a broader set of responsibilities from our founder, who was still incredibly active in the business. And this gentleman pulled me in with him to help with that. And so that really broadened out into things like helping to drive team growth overall, not just, again, on the finance team, thinking about New Mountain itself as a business and thinking about how we could do better at all aspects of what we did. So everything from how we marketed to our investors to how we decided to drive and add value at our portfolio companies to making sure we understood the businesses we owned in the private equity portfolio. How are they performing? How can we make them perform better? Making sure that all of the truth of everything across the firm was getting out internally so that people had an appreciation for it. Then also just thinking about ourselves, we had really started to accelerate our team growth at the time. So somebody could help bring talent aboard, everything from the brass tacks of negotiating with a new employee to bring them aboard, to thinking about the plans for future growth of what are the job specs we want to fill, why do we want to fill them, getting the consensus of the group and the table. Those responsibilities I started helping to take over really from 2009 to 2014. And then when this gentleman left the firm, really took those over in earnest. And again, New Mountain is a team culture. So everything I do at the firm every day, it's a group of people who do it. I might be helping to drive a process, but it really is a consensus-driven organization. And so we're making hiring decisions together, we're making investment decisions together, but really started to help drive some of that.
And then could you give us an overview of the firm and then your responsibilities at New Mountain?
Yeah, so New Mountain today is a little over $50 billion of AUM. We started the business as a private equity firm, really with this idea that we fundamentally believe in value creation, business building, and sector identification. So we're focused on the areas of the economy that have the wind at their back, acyclical businesses, acyclical industries. And the reason is you never know how long the next cycle is going to be or what's going to cause the cycle. If you're on the losing side of technology or you're tied to commodity pricing, you might do really well if you time the market, but we don't want to time the market. We want to be able to study sectors, become the most knowledgeable we can be in those sectors, and then proactively find investment areas that we want to focus on and companies specifically that we want to focus on that are in those industry sectors. So we started as a private equity business in 1999, 2000 when the firm was founded. In 2008, we said we have all this great research, all this great knowledge that we have. We're only trying to buy 3 or 4 middle market private equity businesses a year. There are 100 that we'd love to own, but they go to a frothy auction market, or somebody else wants to pay more, or we don't see the upside in the same way. So we launched a credit business, which is today about 11 billion of AUM. That business is focused on same industry sectors, but where somebody else, some other sponsor owns the business and we can be a lending partner to them. And then around 2016, we started a net lease effort, which is focused on critical infrastructure, plants, and real estate, real assets, where we can do sale leaseback transactions. So same idea. You're doing a corporate credit underwriting. If the business has survivability in a single tenant, triple net lease, we can be best positioned to study the business in an industry sector that New Mountain knows and likes.
And how many people are you today?
So we're about 250 people at the firm, and we've steadily grown each year, really since I've been at the firm and since before I joined the firm. Every year, we're net more people at the firm. We've grown both the investment team and the non-investment team, the infrastructure of the firm, really all parts of the firm have grown. And we've had some real massive growth over the last 6 or 7 years as we've been scaling all sides of the business.
And then just back to your role in COO, what are those areas of responsibility?
I'm really leading everything at the firm that is not the sourcing of an underlying investment. So I am not out trying to find the next investment New Mountain invests behind, but helping drive the team. So helping to oversee the team, the process to evaluate our people. So our whole year-end review process, whole 360 review process, but also hiring decisions for the team. What are the hires that we're going to go out and get, making sure I'm getting consensus from the table, but helping to drive the team and the team performance, helping to just run the firm overall. So that plays into driving the investment process. So I describe it as people, process, and then strategy of the firm. So thinking forward, what fund size do we want to be? What are we trying to gain? What is the 5-year goal for the firm? While we're not sitting and painting very deliberate budgets for the firm, what is 24 going to look like? What's 25 going to look like? We aren't doing that, but we are setting some bigger goals like, hey, we would like to be in this business over time, or we'd like to scale our credit business to be X size from what it is today over the next few years. And then helping to coming up with the teams on a strategy to get there over the next few years is a big part of my role. And then lastly, it's really helping to oversee the whole non-investment infrastructure of the firm in a very direct way. So there's great, very talented people on our non-investment teams that are leading every aspect of it, from compliance to finance, but just helping to oversee those individuals in the organization.
Then just back to the governance process. I mean, this underpins every organization. Can you tell me a little bit about how New Mountain governs their investment process?
I think this is something that firms should be taking incredibly seriously. And I think some firms operate with this mentality that we are the 5 smartest people out of a 100-person firm, and nobody will question us. The 5 of us make the decisions. We have the vote on the investment committee. We have the exact opposite mindset. Sometimes the most valuable piece of knowledge you can have in an investment decision could be as a 27-year-old. Maybe you were just at an investment bank and you helped lead a diligence process and learn something about the competitive set that's additive or valuable to our own decision-making. And so at New Mountain, all investment team members are formally on the investment committee. And if you sit in the room and you are there or your video is on Zoom, you get a voice at the table. and we go around the room when we are making the final or close to final investment decision. Everybody has a vote. If you are in that room and you are an associate, a VP, or a senior managing director, we are going around the room and asking everybody their perspective, because we do think that opinions and points of view are age independent and experience independent. And we hold ourselves to this very humble position that we know that we don't know everything, and each of us doesn't know everything. And so by opening it up and having everybody be able to weigh in is a super important hallmark of our process. That's not to say that we just let people off the hook. We do want to formally get every senior person on record. So if a senior person is on a plane and misses a final investment committee meeting, we do have a process to make sure we're recording their vote, to make sure that they are on record. That young associate, we're not formally making sure that they're on record, but we are giving everybody the ability to be on record. We're asking everybody, even if they miss the meeting, to provide any dissenting point of views. And then we're making sure that all senior people formally weigh in a voting process. But it's all underpinned on the open, intellectually honest decision-making culture. From my first week at the firm, I saw it in action when we were 10 people, 12 people sitting around a table, where I had just worked on a sell-side diligence for a large private equity firm, and this was their number one competitor. And somebody on the team knew that that was the last diligence I worked on, and they pulled me right in and wanted my perspective from day one. And that is the mentality of how New Mountain thinks. And I think it's why we've really avoided bankruptcies. We've never had a bankruptcy on our private equity side. We've never missed an interest payment. And we've made lots of mistakes, and we've learned from those mistakes. But I think opening up our decision-making process has been one of the keys to us not missing the big thing that causes the bankruptcy so far.
So building this decision-making process, what do you see are common challenges with getting that efficacy pinned down?
I think the challenges are people get busier. The core to what we do is the middle market. We're trying to find 8 to 10 new investments a year. In the core middle market, we'll occasionally do something that might be a little bit larger just because we have real conviction. It's a power alley of the firm. We've had success, and we think it's got all the middle market attributes to upside return. But the limitation to doing 8 to 10 versus 3 to 4 a few years ago is it is a more of a call on people's time. What we try to do is make sure we can properly triage opportunities. And we're not talking about 150 opportunities a year, but how do we make sure that we get the wisdom of the table when everybody's busy and running around? How do we get the wisdom of the table to make sure that everybody is in the 25 to 30 investment committee meetings that matter in the course of a year, and making sure people know those are the meetings to be in? And so we do continue to focus on balancing, making sure we have inclusiveness, not becoming bureaucratic though, where people are bogged down in meetings and mired in processes that don't really have a place to further your efficacy. We really make sure that we rethink processes all the time to make sure that we can get the wisdom of the group, but without bogging people down in 20 hours a week of meetings.
How hard is it to check your ego at the door on a deal that you really like?
It depends what type of person you are. I think for some people, it's very hard. I want to be clear on this. Having intellectually honest culture and a flat decision-making culture, it doesn't mean that people don't have strong points of view. We just debated an investment last week. A lot of us were on the road with our CEOs and CFOs at a summit that we've put together. We had investment committee meetings on Zoom from hotel rooms and in conference rooms that we can break away. And people have very, very strong points of view. The difference between having an ego and thinking my opinion has to rule the day versus an intellectually honest culture is other people's opinion do affect your point of view. So even the people with the strongest point of view, you can hear that they're listening to everybody else. And they might not agree with everything that person says, but that person may make 7 points. And you could tell that 1 or 2 of those 7 points really resonated with them and changes their perspective. And so I think it's not about not having strong points of view. No one would accuse New Mountain team members as not having strong points of view, but they would argue that we're good listeners and we're reflecting on what other team members are saying. And it's a very strong input into our own decision-making.
One question I have is on the operational implications to a deal. So obviously you have an investment that gets presented, and then from an operational perspective, where does the team pick up to actually apply that to see it through to make sure it's actually consistent and meets the standards of your operational team?
Just like we have a flat, non-hierarchical culture in decision making, there is also every Monday, we call it a staff meeting because all staff and all team members are invited to it. Our administrative and executive assistants are invited to it. And we talk through everything going on within our business. It's about a 90-minute meeting. And we'll talk about headlines of what's going on in our portfolio, but we'll also talk about the new deal pipeline. And so in that meeting, oftentimes is a great way for people to know what's far along on the operational team, what's far enough along. There's also the team leaders on the legal side, on the tax side, on the finance side, are also welcome to and can listen into the new deal investment call so that they are hearing what's happened. Now, I sometimes am able to help triage for them and say, hey, look, there's a lot of wood to chop on this investment. Don't spend your time yet on it. Or, hey, this is a proprietary lane. We're working in a direction. There's a lot of support for this. And while we're 3 or 4 weeks away from signing, this is one to stay close to because I think we're going to get there. So it's a combination of me and people like me who communicate with the teams. There's a great peer-to-peer relationship between members of the finance team and members of the deal team that just have an open, honest dialogue about where we are in the process. And it really is pretty seamless. What we don't do at our firm is relieve anybody of responsibility. So post-signing, oftentimes the VP and the associates on an investment team, they are fully integrated with our finance and our tax team on the closing process, on making sure they understand the funds flow. If there's a tax or structural question, they're very much involved as one team together trying to solve the problem. And oftentimes our non-investment team members are educating people who haven't been through the process before, or they have to learn something about the process. But it really is a two-way street. What are the goals of the deal team? Those are communicated to the non-investment team and vice versa to make sure that it's all seamless towards the closing.
When we were talking earlier, you talked about how you guys are opposed to the term back office. Tell me more about that.
In the political correctness world that we're in today, and I'm not making any comments about it one way or another, I'm just saying in the politically correct world, this idea that somebody sits in a back office, just referring to it as a back office, to me is demeaning to what the roles are. And so we at New Mountain believe everybody is an important part of the assembly line. And if you think about the assembly line of what we do, and just use the analogy of an assembly line, there are the geniuses who designed and created the product. But at the end of the day, if the person who puts the screw in the end of the product messes up that screw, the product doesn't work well or it falls apart in the consumer's hand. So we view everybody as an important part of that assembly line, whether you're the person who cooked it up or came up in our equation to what we do. You're the one who really helped come up with the sector thesis and built a whole effort around it. And we have 8 team members driving towards that sector knowledge and signing up executives in the space to make sure we're the most knowledgeable or find the investment and help source the investment, to being the ultimate team member who reports to our investors on the valuation of that investment. Everybody's an important part. So back office to me denotes that you are in the back office, that you are less important than somebody else. We just don't view that. We view that everybody's got a different role on a spectrum and all parts are important in varying ways, but they're all an important part to the process.
And how does that impact culture at New Mountain?
There is a difference between investment and non-investment team members. We can break down the barriers as much as possible. All of our non-investment team members get carry across every transaction we do. So if you are a junior accounting person or you're a senior investment transaction leader, you are both getting carried interest. So there's economic alignment there. We try to do things, like I said, have a staff meeting that includes everybody from all sides of the business. We try to have all firm events. So clearly things like a holiday party, I think most firms have that, but we'll regularly do it. Next Tuesday, we have a firm happy hour where it's just a quick hour get together in the office where you'll see, again, back to my example, you might see an operating partner talking to a young new operations person on the finance team. So there's a great way to break down the barriers by trying to make sure that everybody has an equal opportunity to spend time with each other. But look, obviously the people you work the closest with are the ones you develop relationships. And so if you were to talk to our credit investment team and our credit non-investment team, they feel pretty plugged in together. They have their own credit staff meetings. They have events where the full team gets together. That same thing happens on the private equity side. It happens at the firm level. So we try as much as possible to have an inclusive culture where everybody feels a part of it in some way. But clearly, if you are an investment VP and you're an MD investment leader at the firm, those two people are spending a lot more time together than the investment VP might be spending with a VP on the accounting side. But we try as much as possible to create that togetherness where we can.
How did that come to be? There's a lot of work involved, but how do you stay in front of that? Because you're going to change as you grow, because you guys have grown significantly over the time that you've been here.
I think that what the firm has done well, and we don't always get this stuff right, but as we hire in new people, whether they're at the junior level or they're at the more mid-level or the occasional senior hire, we're trying to make sure that we want to have diversity of background and opinion. Those are really important. So we're not trying to get the people that grew up one block from everybody else. It's good to get that diversity of thought into the ecosystem. People have different backgrounds that help fuel their own opinion set. But one thing we try to make sure we have very much in common with each other are the common value set. And so for us, respecting other people. So as I said, you could talk to a lot of people in this business who would be offended by the fact that if you are a New Mountain senior hire, you're getting interviewed sometimes by somebody 2 or 3 levels below you. I have people that we have hired in laterally at the director or MD level that tell me one of the reasons they picked New Mountain, and they could have gone to 2 or 3 other firms, was that they were a director. They loved that a senior associate was interviewing them because we cared what the junior people thought just as much as the senior people as part of the process. So I think it's about who we've attracted in. Everybody, again, has different points of view, different opinions, different perspectives, but what people have in common who have been successful here is that value set, really caring about the culture, investing in people, knowing that this is an apprenticeship model. No matter what you do in the business, it's an apprenticeship model where a senior executive assistant is mentoring a junior new executive assistant. We have a mentorship program in place that's for our executive assistants just as much as it's for our investment team members. And so people across the organization, I think, have that viewpoint and saw other people invest in them, or they cared about it when they came in. And so they are paying it forward organizationally by doing it with the next generation of leaders. And so even though a lot of us who have been here a long time, we don't have the same time to do that with 250 people as we were all able to do when we were 15 or 20 or 25 people. We have leaders in the organization that have that same mindset with the next generation. And so they help proselytize that across the organization.
One question on the mentorship program is, so there's a lot of different ways you can tackle that. How did you guys approach it?
So we really tried hard to set up a mentorship program that gives people real skills. If you're an investment person, you might have one of your mentors, a junior investment person. One of your mentors might just be an associate who grew up and is now a director of the firm. And so they can help you, hey, look, this is what I went through over my 8 years since I've been here, right? That's very valuable to someone as they're thinking about the challenges in front of them. And then we've tried to have another mentor with that junior investment person that really is outside of the chain. It might be a senior marketing person. It might be myself. It might be somebody who came in laterally to the organization. To give people a little bit of a diverse set of mentors, I think helps when people are particularly trying to get onto the career track at New Mountain. It's really been a helpful way to do it, where they get a little bit of, I walked your exact shoes, but then, hey, this is what I'm seeing from my perspective of where you are in the firm. And then when people have been on the career track, so we're above our associate level, we really try to pair mentors. We try to return mentors every few years so that you can keep that mentor informally, but give you a fresh perspective. We try to pair people up sometimes. Hey, you're a shy person and this person talks too much. Yeah, so maybe we'll pull you more to the middle. But in all honesty, some people, they are shy to talk. They have great things to say, but they're not saying enough. So pairing them up with a type A personality is really, really helpful to get them to get their voice out there. And a lot of times I've learned this myself through many conversations. Sometimes the type A personality, they weren't always comfortable talking in front of a group either. And so they might be able to give little tips that get people comfortable. And so trying to match up on attributes, trying to make sure there's rotation, and trying to make sure that we can help give someone the path that somebody else went through successfully, I think are all part of what we take into account with our mentorship program.
How do you think about the evolution of this? Do you have different generations who are gravitating towards it more than others? Just curious in general how different people handle it.
I think some people thrive on being a mentor. They get some real self-satisfaction out of it. And so they're easier to pin down. They have the regular catch-ups. We tell people once a year at least, even more, try to get out of the office, take them for lunch, a little more of a relaxed. And other people are more transactional about it. And so we try to give the people who enjoy being a mentor the most and are valuable in it, we try to give them more mentor assignments sometimes than some other people. I don't see anything perfect that maps on generational differences. You have some young people who love being a mentee. You have some young people who are just like, hey, I'm working hard and I feel like I'm getting it and I don't need it. I think everybody likes the opportunity when they're very new in the organization to just even have more touch points with people. But you got to make sure it's purposeful. We've tried to add in, again, purposeful infrastructure in the firm to help support our team growth. We've added 2 mid-level HR people who are not focused on producing offer letters, which is a great important part of it. They're not focused on benefits. They're really focused on working with our employees, the experience of employees. When somebody is touching base with an associate and they say, how's the mentorship program? And the associate's like, listen, I can't get so-and-so director to meet with me. They've canceled on me 4 times in the last 9 months. We will be proactive and just try to talk to that mentor or replace that mentor with somebody else and make sure it continues to work well.
You have a very inclusive and highly engaged group. How does the performance review cycle work at New Mountain?
So the performance review cycle when I started at the firm was a legal pad with some comments, and we'd have a quick conversation as a group. So it would be collaborative.
Hey, how you doing?
Yeah, exactly. And I would tell you, it was collaborative, but it was collaborative where the few partners of the firm would get together and they would talk about the 10 people on the investment team. They would have a point of view. We'd jot down some notes and we'd sit with people. We'd say, listen, you're doing this great. You're doing that great. You could do this better. And so it was a very top-down but collaborative discussion. And what we've built it into over the last, really, I would say starting in 2010, 2011, really to make this a best-in-class review process where we're doing 360 reviews where, again, going back to that flatness of culture, if you're rude to the receptionist gets an ability to put in a review comment on you, senior MD. And it's anonymous. I see who it is, but they don't get to see who it is. And so it really is a culture where everybody feels like their opinion is part of the equation on someone's success. So we start the process. We do it off cycle for our youngest investment team members, our associates. So we're going through that now. But for the year-end process, which is where 220 of the people get reviewed, we really kick off the process post-Labor Day, starting to plan timelines. There is this full 360 review process. There's a full 6-7 hour meeting where we talk through the team, where the directors and MDs are talking about the VPs and the MDs are talking about their directors, and we're taking promotion timelines seriously. We're putting things up on screen, showing people how long people have been at what level. And so it's very, very wide in the discussion of someone's growth and whether someone deserves to be promoted. And one of my jobs is to make sure I'm teasing out and not letting get drowned out the naysayer. So sometimes what happens in a review process is there are 9 people who are wildly supportive of a person, and there are 4 people who are less supportive of a person or frankly take issue with a person. Now, thankfully, again, we don't have this situation so much, but in those cases, it's my job to make sure that the 4 people are not drowned out because 5 really positive people come out of the gates and say how amazing the person is, and that person is intimidated. I will say in these meetings, and so will the team of, there's 4 or 5 of us help lead this review process. We'll say, hey, Scott, I know you had a different experience with Sally. Can you share your experience? Really to put people on the spot a little bit to make sure that all opinions get heard. And then we take all of that back, synthesize it, come up with the core messages. If there's a question on promotion, sometimes we'll meet one or two more times with the group or a smaller group to make sure we make that decision on promotions. And then that really leads into giving people the feedback, which is important. We have 5 or 6 of us who are involved in now communicating that feedback and then starting the compensation process, which is not that same 5 or 6 person group. We try to keep politics out of comp. So comp is a much smaller group of people who make those decisions, but that is following the review process to make sure that feedback does actually affect what you get paid to work here. And so making sure we're connecting that and communicating that we're connecting that is important for our team as well.
Yeah. And then if you compare yourself to your peers, what do you think you guys do differently than other people?
The same idea as the investment process. I think the inclusiveness of such a wide group of people is really important. And I think the idea that we'll openly talk about partner promotions with the full partner group. Again, I don't think people always do that. And there's this view that I don't want to make it a democracy. And again, we don't have to operate as a democracy. Our founder can overrule people if he doesn't agree, but we actually drive the process of things with consensus-driven decision-making. And I think we don't come to 51-49 votes. We come to 80% or more on every decision. Investment decisions, on promotion decisions, on new hire decisions. And I think that our peer group has a tendency to say, hey, I made it. I'm one of the managing partners now of the firm. I don't really have to listen to others anymore. I now get to make the rules. We think about it differently.
Does that help you with finding senior hires that are a good fit?
It absolutely does. We're not hiring at the senior level that much, but we do on our operating partner team. So what our operating partner team does is they are working alongside the typical traditional investment team members on everything from diligence of a new portfolio company. They've come from CEO roles, or they've run a strategy, or they've been a CFO or a president of a business unit. So these are people with real operational experience. Now they're full-time on our team, or they're a senior advisor, which is what we call a project partner, where they're spending a minority to a majority of their time with us. They're sitting alongside our deal teams, making decisions on, should we buy this company? What's the value creation plan we have post owning it? And then working alongside the deal teams and the CEOs to drive value post acquisition. We've been hiring a lot of people at the senior level over the last many years. And one of the biggest selling points that we have is a lot of firms say, we bought the business, here you go. Here's the business, here's the name, here's the sector it's in. You got to go figure it out from here. And we don't believe in that. We want their point of view. If they're signing off on a set of value creation initiatives, we're going to take this market into Asia. We're going to hire 22 salespeople because they're way underutilizing the sales force they have. We want their operating skills to bear in the diligence process, not just post-acquisition. And so that's been a huge recruiting tool for us when we're talking to senior operating partners. And it's that way at the young associate level. When we interview associates, I tell associates, we're looking to hire the next partner of the firm. I tell them, it's not going to happen tomorrow or the day after, but if you have a great career here and you do the right things, you're going to be on a path to be a potential partner and leader of the firm. Nobody's holding you back and the sky is the limit.
And then on that, how do you manage promotional expectations? Because everyone's thinking about up, up, up. How do you manage that cadence? Because eventually you promote everybody and it gets a little sticky.
So one is just communication. So being very clear with people on where they stand and what their trajectory is and what their goal is to get there. I think we have gotten better and better. I don't think we were great on this 15 years ago, but we've created something called the skills ladder. So when you are at the associate or you're at the VP level, these are the 22 skills that we subjectively say you need to master to get to the next level. And it's one of the jobs of the mentors. It's one of the jobs coming out of the review process. If there are gaps in the skills you need to get to the next level, we're trying to give you those tools. Sometimes internal training. We have something called an associate boot camp. Some associates might come from a consulting background and they're just not as great at building a model as those who came from investment banking. And so it's our job to make sure we're giving them the skills to be able to get to that level. And so that boot camp helps those people. Sometimes I referred to before, a mentor-mentee training. It's sometimes communication training. Someone's having a hard time finding their voice. And so we've used outside consultants to help with that. But we have not created a quota system in any place at New Mountain. So we don't say, hey, we can only promote 2 people to the partner level every year. We have said, look, if you meet the absolute bar, not a relative bar, if you hit the absolute bar, and we try to give you what is that absolute bar, how do you get there, and then give you the skills to do it. If you hit that absolute bar, you will get promoted. And what we keep doing in our business is keep adding to the quality of what we do and keep growing the pie. So if we have better deals and our performance is better and better, and the new investments we're making are better and better, we have 20 transaction leaders, we can have 30 transaction leaders in 5 years from now. Because if everybody's at that highest level of quality, and we keep the performance bar at a high level, we'll just have a bigger pie for everyone to split.
And then how did that come to be? There's all the different directions we can go. I think this is the best way for us.
On some of these things like our skills ladder and just our review process, I think a lot of us have really built a peer network that is very strong. And so one of the things I heard coming out of the pandemic from people was peer networks have been incredible, combating COVID, and when do we go back to the office, and what are your policies? And thankfully, a lot of us, including myself, I always put a lot of value in developing a real peer network. So I'm talking to others, and we're sharing best practices oftentimes with each other. And those best practices are picking and choosing, become a menu for, hey, these 2 firms have had a lot of success with this idea. Should we try that? I talk with our partners and talk with the group of people responsible for our feedback and review process. They're like, oh, I really like that. Sometimes we're the pioneer, right? We've come up with the idea. Trial and error, not being too afraid to try a new idea. And if you fail on it, because we're not so bureaucratic, we could just get rid of it. And next year, try something different. So a little bit of all the above.
Is there anything that didn't work out?
There have been lots of things that haven't worked out. We tried committee structures on things that we've disbanded, or we used to have meeting slots that don't make sense to do anymore. One of my big jokes is it's still technically ongoing. We tried to make every hour-long meeting only 55 minutes. So you default, when we send you a calendar invite, that it defaults to 55 minutes. Try to give people breathing room so we're not late to a next meeting. Give people 5 minutes in between. It's been very mixed. And if it doesn't work, we'll go back to just technically all the calendar invites will be an hour. So there's trial and error on simple things like that. There's let's set up this committee. Let's set up this process. But we try to be entrepreneurial and not, again, add too much bureaucracy. Try to add some process without the level of bureaucracy that I think has held back some other players.
Yeah. What is your cadence of being in the office these days?
We typically ask people on the investment team be in the office 4 days a week, Monday through Thursdays. On the non-investment team, it's for 4-3 rotation. As that team tends to have less travel, they are together a lot more. Whereas investment team, you might be here Monday and you might be on the road Tuesday through Thursday. We're trying to have more in-office concentration for when people are not traveling there. But it's worked well. I think people have figured out how to work remotely and work in a hybrid way. But we do think nothing replaces in-person from a coaching and developing, from an apprenticeship. And while we can make good decisions and we don't question decisions we made on COVID, Zoom calls that we had to make in late 2020, we do think decisions are better made in person.
I want to talk about growth and where you guys are going. You now have an office in Japan. Can you tell me more about that?
So one of the hallmarks of the firm to date has been, back to what we just talked about on when are we in the office, is we really like having the investment team all together as much as possible. And so the headquarters for our full investment and operating team, with exception of one, I'll come back to, that's here in New York. There are people who are on the road all the time. They're out of companies all the time. They might be Atlanta based because they're close to our Atlanta companies, but this is their headquarters here in our New York office because we wanted to get the biggest conference room we could possibly get to get people together. And look, for the people that are traveling, they're on Zoom and we've got great video conference capabilities like everybody now, so we can be part of that decision making. But there is also a sense of just walking the hall. I can go walk around and I see somebody on my way and I ask them about a project that he or she is working on and what the status of it is, or I came up with an idea this morning and what do they think about this? What do they think about that? So I think it's been helpful. Before I even joined, we had a San Francisco office, which was close to our West Coast investors. We've now moved that to an LA office recently. because the person who was in our San Francisco office actually moved to open up our Tokyo office. So our Tokyo office, our UK office, which is in London, and our LA office are solely investor-facing offices. So talking to the institutional limited partners that are in that region and to be super close to them. There are not investment activities going out of those offices. We have an office in India. We found that our second largest footprint of employees is in India. So we have an operating partner who sits in an India office to be close to the 10 plus companies who have operations over there. So he can be on the ground working with those businesses, no different than an operating partner in the US is working with US based operations. But outside of that operating partner there, the full investment team sits here in New York.
And does that just pick up on just the time zone differences and gives those LPs the ability to talk to your team on a normal cycle?
That's exactly right. Be closer to them, be able to be in the flow. Somebody's throwing a happy hour or there's an event. It's very hard episodically to get in the same flow. Even though this gentleman who went over there, he was basically going over there every quarter. You just can't be in the same flow and have the same cadence as actually being over there and being in the market every day, living it, having one of your kid go to the school of another LP's kid and connecting through that way. There is more to it being on the ground there.
Yeah. And then why Japan?
So we thought a lot about where in Asia to be. And for people who are on the ground and have ever been on the ground in that region, you hop on a plane from Tokyo to Singapore. I mean, it's longer than New York to London. So it's not like it's that close.
Unless you're American.
Yeah, Asia's pretty big. Our view was Tokyo and Japan was the first place that we had investors in. We today have over 30 institutional investors from Japan. And so we just thought it was a natural place for us to hang up a shingle first because we have such a large and expansive relationship spanning back there almost 20 years in the Tokyo market. And we're very committed to the rest of Asia. And we have a lot of great investors that we've been able to build over the years, but we are deepest in Japan.
That's a big hoop to jump through from a legal perspective. Did you need specific licensing or did you partner with somebody?
We did need specific licensing. We went through all of that. Employee one was our colleague who moved over there from San Francisco. Employee two was a full-time compliance person, which is needed, a local person with the knowledge base on filings and reporting. And so we really took the time. We spent about a year preparing to be there before being there. And the compliance person was actually hired before our person was even on the ground there and until our type 2 license got approved. And so we've been doing things by the book to make sure we can support now having a person on the ground.
And then I want to turn to just growth and strategy and anything new on the horizon from an investment strategy perspective.
So we're always trying to be thoughtful about what we do. We are not trying to raise assets just to have a bigger AUM number. We're trying to be quality in everything we do. It's led us into the businesses we're in today, which are effectively 3 strategies, but even our private equity flagship, we have a non-control equity strategy where control is not available. We have the ability to make non-control investments. We are always evaluating new things that we think could be complementary to what we do in our 3 strategies, but nothing to announce today, but we are talking about and ideating around different things that could be a valuable additional thing to be in front of our investors with that we think we can be differentiated.
I love your thoughts just on, there's a lot of people in the market thinking about how do we tap into the high net worth segment. You have the wealth managers looking for private equity, looking for private credit. Is that something that's on your mind?
It is on my mind. It's on our radar. We're helping to try to formulate our own play in that area. We have somebody on our team who's actually pretty focused on it and looking to create an offering in that space. And so we're very focused on it as a channel. And we do see the same growth that everybody else sees. That space is wildly underpenetrated to alternative investment, and it's a big opportunity.
Just given your global footprint, how do you think about outsourcing partnerships? You mentioned India. Can you tell me more about what you're thinking about there?
We're trying to add jobs at our companies. We're not a play that's just trying to look at cost. We really are looking at revenue growth across our portfolio. So a lot of times that just leads to us adding jobs and adding headcount. But there are great BPO capabilities in places like India. And frankly, there's also just a talent shortage. The US is effectively at full employment today. That might not always be the case, but today it is. And to get young talent across some of our portfolios, engineers, accountants. That capability set is really hard to recruit solely in the US, and we need another talent center, and India has been a great way to do that.
One other thing, I noticed that you guys have something that's called a social dashboard. Can you tell me more about that?
So our social dashboard, we started this in 2008 as the great financial crisis was happening and everybody was blaming and pointing the fingers at everybody. And for us, we publish it every year since then. And we do take a premise that when you're looking at the defensive growth industry sectors that New Mountain focuses on, we think at the core is being good members of society, doing the right thing. We are very focused on buying into businesses, being partnered with founders of businesses that we think are doing the right things for society, that are doing good. And so our social dashboard is really just a way to be on record. The jobs we've created, net of job losses, how are we paying our people versus the national median and average, how much are we investing in R&D? And the greatest form of social responsibility is never having a bankruptcy, never missing an interest payment is a great way for us to show, look, when people try to attack the industry at whole or specific firms, looking at the social metrics that people take to evaluate themselves and seeing that those are trending, continue to trend positively, we think is a great attribute. And it's something we want to be on record with.
Adam, this has been really interesting and talking about a lot of different things we haven't talked about on the podcast. But I'd love to close with two questions. And one is, what advice would you give to an emerging manager from an operational perspective?
Make sure you're investing time to set things up the right way. Actually, talking about peer networks, I'm in this peer network with other COOs, and one of the people that puts together the network asked me to speak at an emerging manager dinner to give them advice on this very question, Scott. I think when people underappreciate setting the operational infrastructure up the right way from the beginning, they spend many, many years sometimes having to rebuild systems, using technology to track everything from their pipeline to their GL. So making sure you're making the right decisions up front and hiring sophisticated people with good experience to lead these efforts and making sure that operations is a partner to the deal team and the business overall. Those, I think, are the mistakes that people have made. And that's my advice to people: to avoid those mistakes, emphasize the importance of it early on in your fund life.
Good stuff. And then the other question I have is, what is the one industry book, article, other material that you most commonly refer to people?
I don't say that I refer to anything specific. Sometimes it's the latest thing on my mind. So I'm reading a book now about the semiconductor industry and the US's dominance in the early days, replacing the vacuum tubes to moving to Japanese dominance in the early 80s because of stagflation in the US, because of national debt that was starting to creep up and high interest rates and high tax rates. I try to sometimes take the prism of whatever I'm looking at and try to apply every problem in that prism. Like, what could my daily life have to do with the semiconductor industry? Not that much, but applying those lessons into my daily life and giving people examples. So probably 25 people will hear over the next month me talk about examples from this book. But then I'll move on to the next thing, reading Elon Musk, learning about his trials and tribulations across his own career. So I think that trying to apply and bring life to everything in the current events market actually is more what I do versus, hey, this book I read 17 years ago is the platform what I do. But if I had to think of one thing, one set of books, it is organizational tools. And we haven't talked about this, but I think one of my own personal keys to success has been have a system of organization that works. Don't let things fall through the cracks. Things get harder and harder. I have this in our business as it's gotten more complicated. I have this as I have a family that I'm responsible for with my wife. It becomes harder and harder to do everything, but make sure that you have a system to make sure things don't fall through the cracks. And so there's been some great books like Getting Things Done and other tools like that that have been great early on in my career, were great tools for me to prioritize organization.
Adam, thank you. Appreciate your time.
Of course. No, thank you, Scott. I appreciate it. Thanks for having me on and happy to talk more anytime.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.